Hello and welcome to Crypto Weeklies. In this video, we are going to talk about near and conduct is machine learning based price forecast as well as regression analysis and estimated bull run target. None of the content is financial advice. Let's get started. The price of near, like most of the cryptos, is in a downturn, especially since December 2024. At that point, the price of one near was at around $8.5. Now it's around $2. So in terms of percent drop, around 60 sorry more than 60 around 77% drop from the December peak at around $8 to now the price action at around $1.86. This is all in line with what the crypto market is doing at a larger scale. You can see near has been impacted. It's ranked number 34 by market cap, but has declined the market cap by about 30% of the last 30 days, still at around 2.2 billion. The market cap is less than Ondo, Aptos, and even Pepe at this point in time. If you look at the historical timestamp for let's say at the yearly open, let's check the historical snapshot for near how it was doing. Now it's ranked number 34 at the yearly open, though the rankings were much different. Number 26 spot for near. I believe at one point the rankings for near I think in late 2024 were much higher than that. Let's take November 2024 as an example and try to search near how it was doing at number 21st spot, almost broken up in the top 20 at that point in time. Now it's nowhere close. Now the market cap based rank is at number 34. That means it's losing some of the steam. Again, none of the content is financial advice on the channel. Nevertheless, this is just analysis of how near is doing and its narratives. If there are any popular narratives at this point in time related to near, again, most of the market per this analysis, this is the latest narratives related to crypto. Most of the market is talking about tariffs and Bitcoin and some of the other coins that we covered over the last 24 hours, such as Hedera, Ethereum, Solana. We have made several videos related to those cryptos on the channel. Again, this is the YouTube channel. If you go to home and check some of the recent videos that were made, HBAR, Bitcoin, Ethereum, as well as Solana at one point. Again, these are some of the machine learning based price forecasts that are very rare to find on YouTube using statistics and machine learning. So for example, for near, per our machine learning model, the one standard deviation recovery, non-euphoria recovery for near over the next 6 months per the machine learning model trend on weekly price action since token launch in late 2020 says that the 68 percentile bull case for near price action between the current price at around $2 at a weekly average to about $5. So that's the peak for near without any euphoria or two standard deviation moves in the market. The two standard deviation move look like this, like they look back in October 2023 till about December 2023. Those moves last for about 2 to 3 months. Again, last time around between December 2023 till April 2021. Again, from July 2021 till about January 2022. So 5 to 6 months. There are some precedents where these moves last for 5 to 6 months. So let's cover the 6-month scenario. If the market turns bullish at it and offers a two standard deviation 95 percentile bull case in the future, price of near could be between $2.30 per this model and at around $13.76. That would still be a lower high compared to the January 2022 or the part of the 2021 market cycle high per this model. It would take much higher bullish environment, the 3 standard deviation or 99.7 percentile bull case for near to escape the last or the previous all-time high at this point in time. Again, that would only put in terms of probability, that would be 0.3 percent chance, and if you have to divide this by 2, because if there is a chance of 99.7 percentile bull case, there is an equal chance of 99.7 percentile bear case. So dividing 0.3 by 2, that is only 0.15%. So around 1/10% chance that the price escapes the previous all-time high at around $18 that was set back in 2022 for near. So this is the machine learning based price forecast, at least in the next 6 months for near, and the next 6 months for near go as high, as far as about middle of September of 2025. Again, the last time around the near peaked early into the midterm year, that is again the bear market year of 2022. So this time around, if a similar price trajectory were to occur, that still leaves about 3 to 4 months ahead from the 6 months, so about 9 to 10 months of the of max permissible bullishness per the last market cycle for near. If we take an average of these two scenarios, the $13 and the $5, roughly speaking 18 divided by 2 at around $9 or $10, that makes a more realistic price target for near, comes close to that 0.5 fib retracement from the previous all-time high at the max wick. This is the intraday wick, intra-week wick at around $22. That was the previous all-time high. This time around, the 0.38 fib level at around $9 was the high for March 2024 rally, at least for near. Again, you can see 1, 2 and 3 tops at a weekly average price level for near, kind of similar to ETH, how it performed in this cycle. 1, 2 and 3 peaks, and then a continued downturn, similar trajectory for near with a different market structure nonetheless, but still a 77% drop. The second level to watch if the prices were to go back up is first, the bullishness has to at least persist to a rally to that 21-week exponential moving average, currently at around $3.73, but it's dropping sharply. So let's say 2 to 3 weeks down in the future, this 21-week exponential moving average could be somewhere at around $3. The 20-week simple moving average at around $4.31. Those are the two primary levels of interest or resistance to watch for per this technical analysis, and then all the way to about $5.94. That's confluent with the 1 standard deviation bull case as well as the 0.23 fib level. And then the average of the 95 percentile and 68 percentile or 1 and 2 standard deviation bull case comes at around confluent at around 0.5 fib level at around $11, roughly speaking. Now focusing our attention on whether near is overvalued or undervalued. Per this model, this is the fair value of near, non-linear estimation of fair value per the polynomial regression based model, where the fair value for this especially for volatile assets such as altcoins, in the bull market the fair value goes up with time, in the bear market goes down with time. Again, that helps identify if the token is a relic or is a chance of a survival if let's say there is another wave or another upswing in the regression based model. That helps identify if the token is a zombie or a relic, or does it have any future. Right now the fair value comes at around $3 for near. Again, it's dropping heavily since about October 2024, since when the price started essentially having a lower high series of lower highs. So that's per this model. If we look at near, if whenever we are looking out for any great deals in the market, applying 1 standard deviation residual to the fair value helps identify this light green line. If you only DCA when the price is lower than this light green line, you're essentially saving a lot of pain, as well as identifying some of the major macro bottoms as it did back in October 2023 and November 2022. The price is really getting squeezed close to that 1 standard deviation residual, currently at around $1.81. If there is any further drop, again the price did hold this level as support at 1, 2, 3, 4, and now potentially the 5th time when the price came close to this 1 standard deviation residual. But again, all of this model available on cryptoweeklies.com, link on the bottom of your screen. This is the home page of the website. Again, one row dedicated to one crypto on its USD journey, and again on its ETH and Bitcoin journey, and some of the other proxies and retirement related models. All of the analytics available over here for free. You don't have to pay or sign up for anything. The analytics that we saw, the narrative cloud, and another analytics such as year-to-date ROI, how Bitcoin heat levels are performing, how major cryptos are doing at a yearly level, how far we are into the bull run. These kind of analytics are available. The overall sentiment score at a daily level, the narratives which are popular in the market using social media, machine learning based text summarizers for crypto related content. All of this content available and updated every single day tirelessly And this website again took about thousands of hours to develop. So if you like this content, please give us a like and subscribe. 30-day performance, 24-hour performance, these kind of heat maps are also available on website under heat map ROI section. The bull market completion at around in the peak valley cycle, peak valley indicators indicate that currently the bull market is nowhere close to complete. Again, the risk levels are dropping. Again, that is quite confluent with the price action also dropping. Now this is a very key juncture at around 20%. If the risk were to drop any further, that would signal a bear market with this blue or a cool off zone. So let's see in the coming days if there is a recovery like we had back in August or and September of 2024, where there was a period when the risks were less than 20%, but then again risks kind of shot up from November 2024 following the results of the elections, and then the risk went from less than 20% to 60%, signaling a short-term peak in the market. If there is a similar scenario, that could correspond to near going to that 2 standard deviation bullish ceiling. If the risk were to go from 20% back to 80% or 60% in that in that environment. Right now, the 1 standard deviation support for near, if the prices were to continue in the downturn, let's say that lasts to about end of May, that is 1.5, slightly around 1.5 month from the current time, at around April, close to April 10th. May 25 is about 1.5 months from here. The support, if the downturn were to last for the next 45 days, is at around $1 level, from the $1.83 $1.83 to 96 cents. That's essentially the support for near, or a downside for near, per this machine learning based model. Let's go back to the regression analysis to identify, as we were discussing the current analysis, the price getting squeezed at the 1 standard deviation residual to the downside. If we apply this with 1 standard deviation residual to the upside, we'll get that about 68% of the time the price stays between the yellow and the green zone. When we are in an ultra bullish case, the price escapes the yellow line. When in ultra bearish phase, the price escapes the green line. If the price were to escape the yellow line, that would signal an end of the non-euphoria bull rally, again quite close to that $5 target per the machine learning based model. Again, this regression based function takes into consideration the latest data as it gets released, so it's updated as of yesterday. And now we wait for any further news to incorporate further price action. So the last time around, when near was at around $8.50 in the week of March of 2024, that signaled a 2 standard deviation ceiling per the model. And this model did help identify if the, so not just when the price hit the 2 standard deviation ceiling, but also when in the 2023 rally, late 2023 rally, when it hit the 1 standard deviation ceiling, and again once in December 2024 when it hit 1 standard deviation ceiling in this yellow line, helped identify what could theoretically be the downside for near from this yellow line till the green line, as it often does. Now from the green line back to the yellow line, if it were to pan out the same way it panned out after the bear market correction of 2022, middle of 2023, when the price did slightly go below the 1 standard deviation residual to the downside, and then came back sharply and visited the 1 standard deviation yellow line to the upside, and the 2 standard deviation orange line to the upside as well. The 2 standard deviation orange line right now is at around $7.20, but if the prices were to come back sharply in an upswing, that 2 standard deviation ceiling, as now it's falling, the shape of the regression function can also change if there is a macro bullishness in the market, and that 2 standard deviation ceiling could be somewhere between $7 and $10. If we are looking at near from the simple moving average based risk, the 20-week simple moving average based risk, the risk levels are at 18%, second best time to DCA per this model. For near, again this model did identify the March 2024 peak at around 91% risk levels. We were making several videos related to near across this bear market and the recovery year and the halving year. We can see that over here on the channel, several videos related to near made across several different multiple time period. This is a smaller channel, that's why you might not get the updates of our videos on the YouTube algorithm. But again, if you click like and subscribe to the channel, you might be updated on the progress. We continuously develop new models, release them, test them, backtest them, use statistics, machine learning, and AI based approach to help clear out some of the noise in the market. Right now, the 18% risk level, again, if this model were to be used to DCA with that idea that only to DCA when the risk levels are less than 20%, and again, be cautious when the risk levels go back to this 50% to 60% target. That's where the euphoria phase kind of starts at 50% ceiling. The 50% ceiling says that the price action could be between, if the prices were to go to that 50% risk target, the price of near could be somewhere between $9.50 and about $11 per this model. The SMA model, that is the 20-week simple moving average based estimation of the risk. The DCA model, which takes into consideration the regression based fair value for near, again, as we witnessed in the polynomial regression based weekly price action discussion, this model also identified with 92% risk peak of for near in March of 2024. Now per this model, risks are at around 15% or 0.15. If the prices were to again go back to that same level as we discussed, as they do before the kickstart of any euphoria case, again per this model, that regimen, again this model did identify the bottoms in December 2022, in 2021, as well as in 2023. The best times to DCA per this model again did coincide with the some of the major lows. Ignoring that for a moment, now going back to this 40% to 50% target on the risk levels, where the euphoria phase may or may not kick in. Once it did in early 2024, but in late 2024, that was all the market had to offer, between 40 to 50% risk. So if the prices were to go to that level per this model, the price for near between 40% and 60% risk is between $3.83 and essentially $5 if we were to extend to that 60% target, and that would put near's forecast to confluent with that one standard deviation non euphoria bull case that we saw for near per our machine learning model at around $5. So that's one target for near. So just to summarize, the $5 target and the $10 target uh, are having a lot of confluence per the model. The time weighted average price model, though, this model is particularly useful in a bear market, when the price essentially trades below the blue line, offering a wider accumulation zone which spans across multiple years, like it did between May 2022 to about March of 2024. Although the price did go much higher from that, again averaging in this time period with again a step function, and eventually looking at the risk, elevated risk that near offered in March of 2024 would have, historically speaking, been a great idea. Now the price is again back lower than the time weighted average price. Coincidentally, the time weighted average price is close to that one standard deviation bull case, also at around $4.63. The prices were to gravitate back to the time weighted average price, that would signal a non euphoria bull case for near. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.